Hey there, savvy savers. Are you ready to learn how to maximize your savings while filing your income tax in Singapore? If so, you're in the right place. We've compiled the top 10 essential tips to make sure you're getting the most out of your tax returns. Tip 1 of Maximize Your Savings, 10 Essential Tips for Filing Income Tax in Singapore, is to claim rental expenses. This means that if you receive rental income from a property, you can deduct certain expenses related to the rental property from your taxable income. According to the IRAS, Inland Revenue Authority of Singapore, the expenses that can be claimed as deductions include interest on the home loan used to purchase the rental property, property tax, fire insurance, maintenance and repairs, commission and legal fees for renting out the property, property agent fees and advertising expenses. It is important to note that the expenses claimed must be directly related to the rental property and must be supported by invoices and receipts. In addition, the amount of rental expenses that can be claimed is limited to 15% of the rental income received for the year. To claim rental expenses, individuals must fill out the relevant sections of their income tax return form. The IRAS provides guidance on how to compute net rent based on a simplified claim for rental expenses. They also provide examples to help individuals understand how to calculate rental income and expenses. Tip 2 of Maximize Your Savings, 10 Essential Tips for Filing Income Tax in Singapore, is to donate money, shares or other items. Donating to approved institutions or organizations can result in tax benefits for individuals in Singapore. According to the IRAS, Inland Revenue Authority of Singapore, individuals can claim tax deductions for donations made to approved institutions of public character, IPCs, or the Singapore government for charitable purposes. The tax deduction is available for cash donations as well as donations of approved shares, securities, and prescribed items. The value of the shares or securities donated will be determined by the approved IPC and will be based on the market value of the shares or securities at the last transaction. It is important to note that donations of options and shares with restriction on holding periods are not allowed under this donation scheme. To claim tax deductions for donations, individuals must keep proper records of their donations, including the name of the IPC, the amount donated, and the date of the donation. The amount of tax deduction that can be claimed depends on the type of donation and the individual's tax residency status. Tip 3 is to know the income tax relief ceiling. The income tax relief ceiling refers to the maximum amount of tax relief an individual can claim in a year of assessment. There is a personal income tax relief cap of $80,000 that applies to the total amount of all tax reliefs claimed for each YA. This means that the maximum amount of tax relief an individual can claim for all eligible tax reliefs combined is $80,000. Tip 4 is to understand tax residency. Tax residency refers to the determination of an individual's tax liability based on their residential status in a particular country. In Singapore, an individual is considered a tax resident if they have been physically present or working in the country for 183 days or more in a calendar year. If an individual is a tax resident, they will be subject to Singapore's progressive resident tax rates, which range from 0% to 22%, depending on their income level. On the other hand, if an individual is not a tax resident, they will only be taxed on their Singapore-sourced income, such as employment income earned in Singapore or rental income from properties located in Singapore. The tax rates for non-residents are generally higher, with employment income taxed at a flat rate of 15% or at the progressive resident rates, whichever results in a higher tax amount, while directors' fees and other income are taxed at the prevailing rate of 22%. Tip 5 emphasizes the importance of understanding the difference between taxable and non-taxable income. Taxable income refers to income that is subject to income tax, such as employment income, rental income, and business income, among others. On the other hand, non-taxable income refers to income that is not subject to income tax, such as capital gains from the sale of personal assets, gifts and inheritances, and certain government grants and payouts for the acquisition of capital assets of a company. For Tip 6, businesses can claim tax deductions for expenses that are wholly and exclusively incurred in the production of income, and that are revenue in nature. This means that the expenses must be incurred in the normal day-to-day operations of the company. For Tip 7, tax reliefs are deductions that can be claimed to reduce the amount of taxable income, and thus, the amount of tax that needs to be paid. In Singapore, there are various tax reliefs available, including personal reliefs, earned income relief, spouse, handicapped spouse relief, parent, handicapped parent relief, qualifying child relief, handicapped sibling relief, grandparent caregiver relief, CPF relief, supplementary retirement scheme, SRS, relief, and others. Tip 8, keep track of your tax filing deadlines. The IRAS website provides a list of due dates for various tax submissions, including GST returns, property tax bills, and employment income and commission submissions. Failing to submit tax returns by the deadline may result in penalties, so it is crucial to stay aware of the due dates and ensure that all necessary tax submissions are made on time. Tip 9 encourages individuals and companies to use tax filing software and resources to make the process of filing income tax easier and more efficient. Try to seek professional help or assistance if you can. This means that if you encounter difficulties or have questions while filing your income tax, it may be helpful to seek the assistance of a tax professional. A tax professional can provide you with the necessary guidance and advice to ensure that you are filing your taxes correctly and taking advantage of all available deductions and credits. In conclusion, filing income tax in Singapore can seem like a daunting task, but with these 10 essential tips, it can be a manageable and even beneficial process. If you enjoyed this video and want to stay updated on the latest investing trends, tips, and expert advice, make sure to hit that like button and subscribe to the Investing Iguana. We're constantly working on new content to help you navigate the world of investments with confidence. And don't forget to hit the notification bell, so you never miss any of our videos. If you have any questions or suggestions for future topics, feel free to drop a comment below. We love hearing from our audience. Thank you so much for joining us today, and we'll see you in the next episode. Until then, keep investing wisely and growing your wealth. This is the Investing Iguana, signing off.